what types of things do you recommend people not do while they're trying to get pre-qualified or when they're under contract on a home?
There are a million different things, right? The main thing is, let's not do anything that can affect the three main items that lenders care about: credit, income, and assets. Credit, income, and assets. Those are the three most important things. So when it comes to credit, we don't want to, continue to pull our credit for multiple reasons, new credit cards, any new type of debts. Debts kind of fall into the income bracket as well, right? Because if I'm qualifying you for a specific purchase price, I'm qualifying you for that based off of your debt to income ratio. And so if you add more debts because you've co-signed on a family member's car, or maybe, I've used this example in the past, if you co-sign for your daughter's or son's student loans for them to go to school, that can have a negative impact on your qualification. Other kind of things would be if you change jobs in the middle of this process. Maybe you were a W-2 salaried earner and you've transitioned to maybe someone who's heavy on commission. That is a completely different qualification structure for us, and that could push you out of qualification. So any kind of life-changing event, any type of financial event that's going to affect you from a month-to-month basis, always ask me the question. Like, don't hide it from us, because we find out eventually. And the reason why we find out is because the mortgage underwriting world is so heavily regulated that we have to see all of these documents, and we constantly have you update us with documents. So we'll find out eventually. Those are the kind of things that we want to stick away from. Let's try to be as consistent as possible until you get the keys to the house. And then you can go crazy.
So mainly employment changes, big purchases, things that will affect, like you said, your debt, your income, and your assets. All of those things should probably be talked about with you before maybe making those changes or doing that if you're under contract.
Correct. And it's never any judgment, right? My job is not to judge you on what you're doing. My job is to inform you that this can have a negative or a positive impact on your home buying, process.
I mean, if the buying process in a competitive market, right, and just in general, right, there are so many things to be aware of, and that's where a lender can help you on the financial side to make good decisions, and then the Ramirez team when it comes to actually finding the real estate and making sure you know what you're getting into, because it can be a beautiful home, but behind it can be deficiencies and deferred maintenance and things that are going to require time and money. And so I think it's super valuable to be connected with the team, meaning a lender, a real estate agent, and then a consumer who is knowledgeable of what they're getting into and being able to make confident decisions. Does that sum it up there?
Yeah, I'm picturing in my head, it's kind of like having two little angels on your shoulders, right, during that experience, and just having someone guide you through the decisions that you're making and thinking through things before you do them.
So when it comes to somebody getting pre-qualified, Armando, in a nutshell, right, if you can summarize it, you're looking at debt, and you're looking at income, you're looking at credit. I mean, high level, is there anything else that we could talk about? I mean, that when somebody's getting pre-qualified in the beginning?
Sure, I mean, we touched on it a little bit. Timeline matters, right? And there's so many, there's a million different variables, right? Is there a job change coming up anytime soon? Are you coming into money from an inheritance? There's multiple different kinds of things, but at the end, all of that funnels back down to credit, income, and assets. So as long as we can keep those three under control, then we're good. There's this old analogy. Imagine a stool with three legs, and if one of the legs is missing, then you can't sit on the stool. That's credit, income, and assets, right? If one of those is deficient, then they're all deficient, right? You can be somebody who has amazing income and no savings, or maybe pretty horrible credit. Those could affect you from qualifying. And there are specialty programs out there where maybe we can overlook one over the other, but those are very specialized, like niche programs that I wouldn't ever really want to depend on those type of programs.
Yeah. And I feel like that's the summary of why having a conversation with someone like you and getting pre-qualified before you start looking at houses is so important, because you're trying to look at the bigger picture of your financial situation and how you're taking that into owning a home, rather than just saying, I make this income, I think this is what I could afford. I'm just gonna go buy this house.
Exactly.
I mean, taking it slow in the beginning. I mean, I personally like to say when we're getting connected with clients, we like to slow you down to then speed you up, right? Or another way to say it is our timing will match yours. And so I think it's about talking about the things that somebody may not even be considering, you know? I mean, to prepare themselves financially. And I keep saying time because it's a big thing. When people wanna buy a home, we really want them to realize the time that is going to be needed of them and the availability and the commitment to accomplish what they're looking to do, right? We don't want to just go, we don't want to rush the process, right? We don't want to just go and randomly see a home. You want to have a trusted relationship with a lender and with a real estate agent and to be communicating ongoingly. And I personally think that makes the process better. I think the overall experience, I also think that's how people find ultimately what they're really looking for without just, you know, boom, making a decision.
You feel confident in your decision that you're making because this is one of the biggest decisions you're going to make in your life. Maybe you make it once, maybe you make it multiple times, but when you're making that decision, you don't want to go into it blindly. You want to go into it with full confidence that you've thought through everything, you know what's going on financially, you know what's going on, again, like you said, with the condition, and you just have that security going into this asset.